Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we have a finished three-wave corrective structure and look for a bigger move to the upside. In this scenario, the common target for your wave C or Y is between the 1 and the 1.236 trend-based subextension taken from the start to the end of A or W to the end of B or X, which as you can see is nicely respected. However, there are two things that I have to talk to you about that do impact the probabilities for this scenario. First of all, if we look at this being an ABC zigzag, which is a 5-3-5 wave structure, then inside wave A, we have to count a 1, 2, 3, 4, 5. However, your wave 4 here is shorter than the 382 Fib time compared to wave 2, meaning your wave 4 is shorter than 40% of the time of wave 2, which is incredibly short, as usually your wave 4 is longer than a wave 2. That is most common. So therefore, it does impact the probabilities negatively that a wave 4 is even shorter than the 0.382 Fib time. That's very uncommon. Now, second, if we look at a WXY, we're looking at a double zigzag. So we then have an ABC to the downside, three-wave correction, and then another ABC. Now, if the wave Y over here is a three-wave structure, then you can see we cannot count this wave A, B, and then a wave C. And the reason is that for this to be a wave C, we actually needed another low. 1, 2, 3 lows in an ending diagonal. 1, 2, 3, 4, 5. So at the moment, the only way we can end wave Y at this low would be to count this as a wave A. Then this mess over here on the lower time frame, 50-minute time frame, there's a little bit of a range that has to be a wave B, and then all of this 1, 2, 3, 4, 5 wave structure is your wave C. But that means that your wave A in time and your wave C in time is significantly different. Your wave A is very, very short and your wave C is very, very long. So there's not a nice confluence between the two in time. The second scenario is a bearish scenario, and here we are looking for an impulse to the downside in a wave 1, 2, 3, 4, and then a wave 5 to still take out the low. The invalidation for this scenario is the 0.618 at 63.7k, and preferably you are finishing this wave 4 before this 5 Fib time. And the 5 Fib time is taken from the start of 2 to the end of 2 to the end of wave 3, as preferably a wave 4 is shorter than 5 times the length in time of your wave 2, and the 5 Fib time here is sitting on Monday the 7th of October, 11 a.m. Central European time. Now inside this most common target area for your wave 4, which is the blue box between 62.2k and 63k, we do have some resistance. First of all, the daily naked point of control at 62.5k, we almost hit it. I do expect it to hit at some point. And just above this area, we have the blue box. As you can see here, there's a bit of confluence between 62.9k and 63.3k. Also has to be said that above this resistance, you can see there is not too much going on, and then we have 65.8k. The only thing arguably that we can then find as resistance is either pulling a volume profile of this range, and then, well, there we have a point of control at 63.6k as resistance, or we pull a volume profile from the upper side over here. So this ranging area, you see the point of control is similar, and a value area high at 64.6k as resistance. But it is not significant. It is not comparable to the usual levels that I am looking for, that I fit inside my target boxes. So these two levels to the upside at the moment are important for the bearish scenarios. And this is the first out of 3 that I quickly want to show you, because the second one is a finished move to the downside. Now this one has a lower probabilities though, and I will explain why. So we have a 1, 2, 3, 4, 5 wave structure, looks quote unquote pretty solid. However, your wave 5 here is longer than your wave 3, so you have an extended 5, which is uncommon, and also the highest amount of volume is in your wave 5. The volume in 5 over here right, is higher than you had in wave 3. Now, if a wave 5 does extend, it is common for 5 to have the highest volume, but an extended 5 is uncommon, and also just in general, highest volume in 5s is also not something you really like to see, as most commonly your wave 3 is the extended wave. So that is why this at the moment is an alternative scenario. And only when price hits the 618 here at 63.7k, or we get a sideways structure that is going to range way beyond the 5 pip time, are we going to divert from this to this bearish scenario, where you look for a bigger wave B, either bigger in price or bigger in time, and then a wave C to the downside to take out the low of your wave A. Then your final scenario is a bigger bullish scenario, actually, because here we then have an ABC down in W, a zigzag, then a wave X, and another ABC in a wave Y. And what makes this an alternative scenario is the 1.618 for Y, because the common target for a wave Y is hit. As explained in the beginning, this is also your common target for a wave Y, also in a double zigzag WXY, which I have here. But in this particular scenario, this diagonal would then only be a wave A. You're working on a wave B, and then another C down. Invalidation is the high, but then you look for another C down, and then pretty much below this low, all that is left is the 1.618, which is a little less common. Now, we do have interesting support to the downside, which we haven't touched. And in a way, it is a little bit bothersome, not gonna lie. Like, I do like some levels to be hit. So we found support here on the daily naked point of control. I already removed it from my chart as we hit it 4 times. So this was the first time, and then second, third, and then a fourth time here. And it has been holding all that time, but it is 4 times testing a point of control, daily naked point of control. And yeah, it's an interesting level, but just below the daily naked point of control here, we do have the point of control of this volume profile since 49k at 59.5k, which arguably is more interesting to test. And also below this, we have a monthly naked point of control, 57.9k. That is great support, an interesting level on the chart. This is the level where in the month of September, most of the volume has been traded. So 57.9k is interesting, and 59.5k is also interesting to me. If we look at the 4-hour time frame and we compare the move to the upside in time with the move to the downside, and you can see that this low over here is made before the 0.382 fib time, and that is very uncommon. If in a bigger bullish diagonal on the daily time frame you are looking here for a wave 3 and then a wave 4, then it is by far most common for a wave 4 to end after the 0.382. And also, a wave 4 in a diagonal has to be a zigzag family structure. So either an A, B, C to the downside, or a WXY, or even a triple zigzag WXY XZ, but these are very rare. And in another bullish scenario where you would look for a multi 1-2, 1-2, 1-2, and move towards the upside, you like your wave 2 to end after the 0.382. Doesn't necessarily mean you have to make a new low, but you do like to end a corrective structure after the 0.382. So the fact that this low is made before the 0.382 does lower the probabilities for very bullish scenarios and immediate continuation to the upside to take out the high at 66k. Arguably, the only scenario that fits from a time perspective is a scenario where we have a bigger WXY on the daily, so a 3-wave structure, with a triangle in a wave Y. Now, a triangle in Y is also not common, and this is then the end over here of your wave Y. You count this as a 5-wave impulsive structure, and then this is your correction. If you take a fib time here from the low to the high and you double click, toggle on the 382, then you can see the low is made after the 382. But it's just that the probabilities for triangle Y and this WXY is not too great at the moment on a daily time frame. So therefore, I do prefer to keep an eye on this 382 and of course on the local price section, which is always important. If we then look at the CVD divergences, then you can see we do have a bullish CVD divergence here on the chart. Higher low on price, lower low on this CVD, with the target being 66k. Now it makes me think of what happened happened with the move to the downside to 52k, because here you can see we also had a bullish CVD on the chart, but initially that bullish CVD was not interesting. We were moving to the downside with bearish CVD divergences. Only when on the 1 hour/4 hour time frame, price was starting to create higher highs and higher lows, creating the market structure as well, locally supported with more bullish CVD divergences, did the probabilities increase for this bullish CVD divergence to play out and take the high at 65k. So this is something that we're going to be looking out for locally as well. We already have a 4-hour bullish CVD divergence. Even if price would move towards the downside, you still have more than enough space for this bullish CVD divergence before it would be invalidated, because the invalidation is 52k. But what we want to look for is more local 1 hour, 15-minute time frame bullish CVD divergences consistently building as price is moving towards the upside, similar when price came off the low at 52k, supporting the bigger bullish CVD divergence. And if we see consistent ranges forming with bullish CVDs, it increases the probabilities to move to the upside and take out 66k. So this is something that I'm very aware of, and something that I will keep an eye on also during the weekend. If we then finally look at the probabilities, then generally based on a time on the 4-hour time frame, we are preferably not yet finished with a corrective structure. Remember the vertical 382 on the chart. Now we were looking for a move to the upside over here last night as price was making this low. Check, because we got the move here to the upside. However, we are now approaching resistance, the daily naked point of control here, and of course the blue box I mentioned earlier. And I will be observing the weekend price action carefully, as it will hint the probabilities of the different 1-hour scenarios I've shown in this video. Currently, taking out this low would still be a higher probability from an Elliott Wave point of view. I do like to see a local range form after this move to the upside to get more clarity. At the moment, price has been moving to the upside consistently without really creating a bit of a bigger range, so that is something I'll be looking out for, and of course the reaction at resistance as well. Now don't forget about the bullish CVD divergences on the 4-hour time frame. If price locally continues to move towards the upside and every sideways range is supported with bullish CVD divergences, we might look at a similar scenario we had from 52k to take the high at 65k, where we had a bigger 4-hour CVD divergence, which initially was not yet too interesting, but as on a 1-hour time frame, 50-minute time frame, price was moving towards the upside with consistent bullish CVD divergences, that target of 65k became very attractive, and we were looking for price to move towards the upside. All in all, let's have patience, enjoy the weekend. Price is also at a great area to enjoy the weekend. We are at a bit of resistance, so we can just observe price action, see if we form a range, and then take it from there. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.